I'm going to ask you for some specific names in a second, just obviously because people are looking for these trades. So December 17th to 18th is the meeting. So basically about 2 weeks' time. I'm thinking about what data we might get between now and then. If the officials themselves are saying we're reiterating this dovishness, then regardless of what you and I, what data in the next 2 weeks do you think could push them significantly towards pausing?
The jobs report Friday is going to be huge.
Okay.
So we've got that, initial jobless claims have been low. Job openings have ticked up. Holiday season, perhaps there's a better jobs report. You got inflation coming in again, CPI at least. Probably not going to get PCE, or it's going to be early for that. But at the end of the day, we've just seen this reacceleration in the economy into year end. The consumer net worth is all-time high. The stock market might be the most powerful economic engine in the U.S. economy right now. And that is just still holding on to all-time highs. That's going to help holiday shopping into year end.
So let's talk about some of the specific, mid-cap is roughly what kind of market cap we're talking? Under 10 billion or?
Like 50 billion-ish.
50.
Nowadays, mid-cap is larger because large cap's trillions.
Yes.
But when you think about 50 billion, 100 billion, it could be a little bit less than that. But frankly, we're finding the best quality around that 50 billion, 70 billion mark.
In what kinds of names specifically?
So industrial-wise, things like Parker Hannifin are a big name in the index, Dover Corp. We've had other names that have gone up a lot. Emerson Electric is one of them. But what we're seeing is you can just be broadly diversified. It's the largest sector in the index. That is the biggest overweight we're seeing in our strategies that are managing kind of more mid-cap allocations. When you go into small cap, financials are the biggest weight. So you're going into mid-cap, you're getting more industrials. They don't care about the yield curve.
Totally.
And we're more diversified. It's building out a manufacturing renaissance in the Midwest that, frankly, is booming right now. It doesn't get a lot of play because of the AI hype, but the Midwest, frankly, is the engine that everyone is overlooking right now, and we think it's one of the best earning engines out there.
Okay, that itself is a fun story on a number of levels, and not something we usually talk about. So given what you're saying then, and you've warned about a few areas, what do you do with kind of the Mag 7, mega cap tech? I mean, do you take a position on that? Do you still retain ownership? And for the large multinationals, which is a lot of people's, big favorite, well-known stocks, do you really recommend kind of no exposure there?
No, we still have the large cap exposure, the Mag 7, because it is high quality. I mean, we keep going back to 2000. We're like, all right, the valuations are almost as high as 2000. But you look at the companies then, they didn't have 40% margins. They didn't have $100 billion plus in balance sheet strength. So we do own it. It's just hard to add to it. When we go down to cap, we're seeing better valuations. We're seeing good earnings. That's where we're incrementally adding to. And the dollar is a story that's yet to play out. That could be a story that comes out in Q1 when they're coming out with Q4 earnings. So we want to address that ahead of that.
Yeah, you also, the dollar, I mean, a lot of this goes back to what's been going on post-election. But do you think that post-election kind of repricing is done now or no?
About sixth of the ninth inning. We go back to the 2016-17 parallel, really in January. Was where it started to fade, and then it was just about earnings growth from there. So it fell back to the earnings growth of the economy and the companies. Right now, we're still seeing that repricing, probably a bit more. But frankly, the financials, the banks, are the number one. They're the epicenter of the new administration trade. It was in 2016. If that starts to face headwinds because of rates, because of flattening, industrial should be the next play, and that's what we like into next year.
I love it. Matt, thanks so much for joining us. Really appreciate it.
Thank you.
Matt Miskin with Hancock Investment Management.